I'm Jay Taylor. I'm the editor of Jay Taylor's Gold, Energy, and Tech Stocks. I'm also the host of a radio show called Turning Hard Times into Good Times. I'm here at the Metals Investor Forum. It is September 7th, 2019, and I'm really pleased to be with Paul Cowley. He's the president and CEO of First Vanadium. It's a company that has had a lot of success in delineating a large-scale vanadium deposit, one of the few in the United States of its size. And so I'm really pleased to be with Paul today. Thanks for joining me, Paul.
Hey, my pleasure.
Now, vanadium, I'm interested to a great extent in gold, but also it's not just gold that makes the world go around. There's a surging demand, I understand, for vanadium.
Yes.
Talk to us a little bit about what is causing the rise in demand for vanadium.
Well, it's an infrastructural metal, so you add it to steel to strengthen it. So it's in rebar for buildings and bridges. So it's the trillions of dollars of spending annually on infrastructure is vanadium is a part of that.
Yeah.
And now adding to that is this growing demand for the battery side of vanadium, the redox flow battery.
Vehicles for.
Well, there is some
of that, but it's more to do with battery storage.
More of these utility size
storage.
Yeah, large energy storage for solar power, or wind power, or even for grid companies that want to smooth their peak load.
Sure.
Or backup power too.
Sure.
Yeah. So there's a lot of growing demand for that.
Yeah, I mean,
that's exciting.
Obviously, the pitfall with renewables is the storage aspect. So if you can. Vanadium, I understand, is probably the best metal for batteries that do that.
That's right. Yeah, it's superior to the lithium in battery in this aspect storage. Because of storing a lot of energy can be risky for fires, and has been fires happening with lithium batteries in that capacity.
Indeed.
So, and then there's this the ability of recharging multiple times over countless years with a vanadium battery, where it doesn't degrade. Where the lithium, after 5 years, you need to get rid of it and get a new one, dispose of it, and so 5 times over. So durability, sustainability, it doesn't make any sense to go lithium, but I think that's the big demand right now. But I think the vanadium one will it started to commercialize 2 years ago, and it's just taking a little bit before it launches itself.
Right.
But it makes the most sense.
Yeah. So. Renewability, storability, that's really the issue there.
Yeah.
What's the price of vanadium these days? And I mean, you have this sort of stable, long time demand for, as you say, infrastructure.
Yeah.
But what is the price of vanadium today, and how is it? I don't follow it that closely.
Right.
So
We're sitting in the last 2 or 3 months. We're sitting between $8.50 a pound U.S. to $9.50 a pound. Last year, probably averaged about $15 to $18 a pound.
Wow.
This is V205 flake.
Sure.
And so there was a real surge in interest in vanadium, vanadium projects, and vanadium price because of there was a perceived demand on more coming into needing to be used in China.
Right.
And so there is, I think, right now we're in a more stable price for vanadium, but I think that it's still being held back with the U.S.-China trade wars. I think once that settles, there'll be a perception of growth or recession that might get relieved, and then there'll be more demand in the infrastructural side, and then with the battery side, there'll be more demand there too. So I think we're in a good position with First Vanadium having this advanced stage project. That vanadium prices will be firming up in the coming months and years for sure.
Yeah.
So we're in the right place at the right time with the right product.
This is the Carlin Vanadium Project, obviously in Nevada, in a very stable environment, a good place to be for mining.
Yeah.
I guess what I'd like to know is, as a person who wants to buy things that make sense, you talk about the vanadium price and what's going to be the cost to get it out of the ground. You haven't really determined that yet. You must have some sense in the back of your mind, but you can't talk about it so much yet, I suppose. But you are in the process of doing a preliminary economic assessment, I
Correct.
understand.
Yeah, we'll just be launching in that in this fall.
This
with
fall.
a delivery Q1 next year.
Q1 next year.
20
So
2020.
next year, investors should have some ability to judge what your operating margins could be
Right.
going
Yeah.
forward.
Yeah.
And that will be a big step. I think
Be a
that
big
should
step.
be a positive
Well,
for investors,
yeah, and then-
assuming it's a positive outcome.
Correct, yeah.
Yeah.
Now, just want to point out that within our team, we've got some very high caliber engineers, mine construction engineers, mine builders, mine operators that are reviewing and being part of the evaluation of this
Yeah.
project. And they're comfortable with moving towards the PEA. So internally, we're
Yeah.
feeling good.
Yeah.
We're optimistic, but obviously can't really say anything more definitive of that because it really is going to be an independent engineering company that
That puts a
determines the
stamp on
cost
it.
and the profitability.
Yeah,
Yeah.
right. It needs to be independent, of
Yeah.
course. And well, that's something to look forward to
It'll
for
be
sure.
very
I mean,
exciting
this
for us,
is
I
one of
think.
the points I think needs to be made about your company is that you have the skill sets internally to actually take this to production, into production.
That's right,
actually.
yeah. Yeah.
So that gives
and our
you-
network.
And that gives you the flexibility. Then you don't have to just wait around for someone to buy you out. You can
Right.
continue to move it forward
That's correct. Yeah.
by yourselves. So you have money to do what you need to do now, and I understand after the PEA, assuming a positive outcome, you'll be looking to do a pre-feasibility study then?
That's correct, yeah.
Yeah.
We'll do a small raise probably to take that to move forward on the pre-feasibility. Yeah.
Sure. One of the aspects, Paul, that concerns me as an investor, a small company like yours with a small market cap.
Yes.
We're looking at a project. How big? I mean, how many tons per day might have to be moved through?
We're looking, right now we're looking somewhere between 3,000 and 3,000 tons to 4,500 tons a day.
So it's going to require a great deal of capital to put this into production, which then leads me to the question of, might you be able to finance this with offtake agreements? Is that one possibility?
Yeah, I just want to clarify that one of the things that we've been able to work through in our metallurgy is to pre-concentrate the material. So that even though it may be 3,000 or 4,000 tons a day
Of mining.
the plant will be
Much
in the
smaller.
order of half or smaller.
less,
So that's
That cuts the cap
cuts the
costs.
cap costs and the operating costs too.
Right, sure.
Effectively.
Sure.
So that's a significant financeability aspect of it, and what we think is key to the economics.
So a lot of the preliminary flow sheets, ideas have been generated already.
That's
They
right.
will be tested through the PEA, and you'll
Right.
be able to break that down in terms of individual costs.
That's right,
And-
yeah,
and then
and
be able-
recoveries and costs.
Be able to-
yeah.
Paul, it's a great story.
Well, thank you very much,
I definitely
Steve.
will take a closer look at it if I can find the time. And
Yeah,
I'm more of a gold bug, but I
Understand.
keep my eyes and ears open for opportunities elsewhere as well, because gold's not everything.
that's right.
You can't eat it, as they say.
Yeah, that's right.
Paul, thanks
Jay,
so much for your time.
Thank you very much.
Really
Steve.
good to you.
My pleasure.